Welcome back to Markets Today. In studio, we are actually joined by Martin Kirimi, who's a senior associate in the research department of SIB Bank. Welcome to the studio, Martin.
Thanks for having me.
Yeah, most welcome. We are looking at October 2019, the NSE summary performance. What was happening there? What happened to the indices, turnover, sentiment? What was the general overview for the month of October?
Pretty bullish month.
Okay.
By all accounts, actually towards the tail end of the month.
Yes.
And the trigger, of course, was the memorandum from the president sending back his objections of the finance bill 2019. So the exuberance came about Wednesday last week when Parliament's Finance Committee approved the president's memorandum. We are waiting to see how heated the debate will be this afternoon.
So the rate cap repeal really was what actually delivered these numbers. And I think we can put up graph number one because the NSE 20 index was up 8.7%. The NASI, was up 9.7%.
Yeah, more often than not, we check the NASI because that's the market-rated index.
Yes.
And that's what fund managers actually take into account. And considering being a market-weighted index, your biggest weighting there is Safaricom. Safaricom half-year results were coming out on Friday, that is 1st of November.
Okay.
So that had an effect. We actually noticed foreign investors buying the stock towards the half-year results.
So a lot of trades. We saw volumes last week.
Precisely.
Okay.
Yeah, but bank stocks ticked up more than the telco.
Okay.
But Safaricom played quite a big role, and Safaricom, the banks and the telco basically are one of the reasons why we have a 9.7 growth in the month of November. Yes.
All right. That's impressive. Is this the first positive? Because when you look at the second quarter, that was negative. Third quarter was also negative, but first quarter was positive. So was this something that you had expected outside of this trigger points of Safaricom and the bank rate cap repeal?
No, because actually when I was here the last time, the debate was how do you expect October to look like? And Safaricom being their half-year results announcement, usually get excitement around that time. Okay. But what was the main trigger? Definitely the memorandum.
The rate cap repeal, that was a surprise one. Actually, no one saw it coming.
No one saw it coming, and I would say for the market, as a market intermediary, and for the economy in general, I think it's about time we got.
So it's a positive. So you're happy with it?
Yes, because the beauty about it is that we actually saw a positive sentiment across the sectors. Okay. After those last three trading sessions of last month, after now that finance committee's decision, a lot of sectors received a boost as well. Okay. And I think that's good for the market.
That's good for the market. We need that. All right. Actually, and just sticking on the banks, if we put up the chart on the top gainers, that's the second chart for our graphics team. The banks were up there. NCBA Bank up 30.7% in the month. So maybe you can walk us through the top gainers list and what was happening there with regards to local as well as foreign participation.
Okay, cool. So NCBA, that is the merged entity of NIC and CBA. October was when they released, they fully merged, and we had the new listed stocks coming into play. Okay. And actually at a stock price of 39.15 at that point, it's still trading at below book value. Because now we already have a merged entity, which now, even with the new additional stock, the 53% for CBA, still trading at a trailing PB. Okay?
All right. So what would be the combined book value for this?
Using half-year numbers, it should be 44, 45, if my memory is correct.
Okay, so there's still some value to pick up from here.
Still some value to pick up on here. Okay. And one of the things when they were announcing now the merger and the new look, I was very keen to know what's the new strategy going forward. And one of what I was excited to hear is now being a tier 1 bank, they want to channel more into retail funding. They want to open up more branches to make sure they tap the low-cost funding.
So isn't that like a capital expenditure play? Or how does that work in a space where there's financial technology, mobile banking?
You have a point, but look at it this way. Your equity bank, KCB, I won't talk about your Standard Barclays because of the client profile. Okay. But your KCB equity, at the branch footprint that they have, you're able to make sure you're tapping into more low-cost funding.
Okay, so deposit mobilization.
Deposit mobilization. They were giving an example that from Kisumu, the next branch you'll find from NIC or CBA is way in Nakuru. So so you get it makes sense to go ahead and expand your branch network. Of course, with the digital the digital strategy still being at play.
Okay.
So you want to go ahead and balance and get more low-cost funding and then increase your margins, especially now if the rate cap is repealed.
Okay.
Yes.
All right. Interesting.
Yes.
Because there's some interesting names here. Home Africa and Kenya Airways.
Yes. I'm sorry to say so for Kenya Airways and for Home Africa.
Home Africa. All right.
Barely pay attention to those
you
guys.
Barely pay attention
because
to them.
Because you'll find probably it's low volumes, and Kenya Airways has a long way to go.
Okay.
Especially with strategy and profitability wise. All the other banks, you're seeing your biggest gainer there is Equity Bank.
Equity Bank, that's up 24%. I think our graphics team can put up the chart for us on the top gainers. So Equity Bank 24.2%,
2%, and all basically KCB just there and COP and Barclays. This is all about the rate cap effect, and now
in less than 7 days.
Precisely.
Wow.
And the beauty, the thing about this is that I think now our talk, most of the analyst talk and most of the market talk was more of, will we have a ceiling? Will the ceiling be increased? But now with the fact that now they want to remove the ceiling, we can't wait for third quarter results and hear how management strategy is going to look like.
Exactly.
Are we going to, will they be risk-based pricing, or everybody's put in one bucket and now we are slapped at a rate?
Okay. So the modalities of this are not yet clear.
They're not yet clear.
Would that explain the correction that we've seen for the last 2 days? Because yesterday and today, these are banks that are up. KCB up 23%, Equity up 24%, Cooperative up 22.3%, and I think all three yesterday closed down 10% in a day. Could that be the fact that investors now are beginning to articulate whether there's value?
They didn't shed 10%, maybe collectively, but all the bank stock aside from actually two, that was just Stanchart and HF that barely 1%, 0.8, that's barely negligible.
Okay.
But all of them recorded price drops.
Yes.
But the point is profit taking.
Profit taking has to happen.
You already have 20%. Even I'll just go ahead, cash in the money, put the money in the bank, wait for the correction to happen a bit.
And then start again. Okay.
Yes.
So what about valuation? So we have our chart up there. We have Coopbank closing at 14.55, Barclays closing at 13.3, KCB 51.75, Equity 46.5. Are they at a good valuation, and is the correction justified? Or in other words, should we expect these prices in this month of November?
I think to me and a lot of investors will be now, and I've been talking to management about this.
All right.
It's all about what will be the strategy going forward. Yes, you're going to open the taps for lending.
All right.
Who has more capacity when it comes to liquidity? Because now...
So who has more capacity when it comes to liquidity?
Liquidity, Equity Bank has bigger liquidity.
So Equity should be the largest gainer.
Exactly.
Okay.
Yeah, it has more liquidity because remember now you can't reprice your prior loans. Unless now you tell me your KCB, I go ahead and start targeting my current clients, and then I tell them, you know what? Come, I refinance you. You're qualifying for 300. I'll give you 500.
You top up and
then you top up, and then now I add
wow.
more that. But whoever has more liquidity on their balance sheet has a better, in my view, has a better leg group to play around.
Oh, and that would explain why actually equity of the tier one banks outside of NCBA, because NCBA had a couple of trigger points over and above the rate cap. But for the rate cap specific, it explains why equity was a top performer in that regard.
And then now, to add to that, that's one of the things. And then to add to that is now that quarter results. I think now everybody will be taking a keen listen to what will be the strategy going forward.
All right.
When we are opening our taps, how are we going to do it? Is it because don't forget the underlying. Remember, even prior to rate cap, the private sector credit growth was already softening.
It was.
So I think the demand side is still softening. So we won't see just a spike.
Okay, that's a good point. So you don't expect, because the last numbers we have seen, I think private sector credit growth was about 6.3, 6.4%.
Yes.
So we certainly don't expect this to jump to 12% in 3 months.
Yes.
Probably just continue on the gradual.
Just gradual, because I'm looking at the demand in that the SME who's demanding this credit must also be having a demand side, whereby if I'm buying these goods or I'm doing a capex expenditure, is there demand?
Is there demand? So is the economy ready for this kind of demand that everybody's excited and buying the stocks for?
I think it is. We'll probably get a shot in the arm when the MPC meets. I think in my view, we'll get a surprise, and it'll be a good surprise. A good surprise,
up or down?
Down.
The benchmark rate.
Down.
Okay.
Yeah.
Down. Is it by material sum? Because if you move from 9 to 8.75.
No, 8.7 doesn't make sense.
But if you move from 9 to 6 or 9 to 7 or 8.
8, 100 basis points, that will be good. Okay. That will be good, because I think that will be a good signaling effect. But I think that will be a shot in the arm. Let's wait and see.
So a shot in the arm, MPC meeting is something to look out for.
Yes.
But
remember, the problem with MPC, they also have to play around with, which I'm very careful to use my words here. I'm very careful.
All right.
Is the foreign exchange side as well, due to our level of
current and forthcoming.
Yes.
Okay.
Yes.
Martin, let's take a quick break. The NSE has closed. Look out for the closing bell and see you in a few seconds.